Feeling stuck as a property buyer today? Let me give you a strategy. Let's go. Hey guys, this is Marcus, and many of you may have seen all these articles before. Sales of new private homes slump in April 2024, lower ever since COVID. And you'll be wondering, oh, are the property prices going to drop? And should I go in today or should I wait for the prices to come down? And as a property buyer, right, it's just very normal. But if you look over here, right, new private home sales fall 58% to 301 on fewer launches in April, right? It just screams like a recession, a crash is coming already. However, if you look at the fine prints, right, what does it say? It says that on average, the first 4 months of 2024, the average number of transactions in the new launch market was 369, meaning to say that 301 isn't that bad after all. However, if today you are not looking to buy a property, most of the time you just look at the headline and give yourself a justification, I shouldn't do it. But for a real property investor, you look at the details to see more reassurance on what you should be doing moving forward. And today I'm going to share with you some interesting research which I've done for my clients, because honestly, I'm also buying property, and recently I just bought another property, and I also have concerns as to whether is the price growth sustainable or not. And for me, it's very simple. I can only be reassured using facts and figures, and the numbers cannot be super complex. It has to be very simple mathematics. And some of you may have also done a similar research, but trust me, I do it in a different way. Maybe because I'm more Kiasee. If you're someone like me who watches multiple videos before committing to a big purchase, do me a favor, tap the like button, because it will help me a great deal. Thank you so much. So how this video is going to be done is that first we're going to talk about the current market concerns, like for example interest rate. Secondly, I'll give you a rundown of the performance of different market segments like HDB, private property, resale, new launch, and even landed properties for you to have greater clarity and tap into my thought process to see what's better for you. Thirdly, I'll share with you a strategy which I am using, and also for my clients, which I call it a very safe strategy, because today anybody that can tell you this property you buy sure make money, please run as far as you can, because no one has a crystal ball. You will never know. However, to provide a safe strategy to mitigate the risk, right, sounds a lot more realistic. And last but not least, I'll share with you my recommendations. Coming to the current market concerns, is very obvious, is the interest rate. On top of that, there's always some mixed reviews, like Lentor mentioned was sold 75% during launch day. Lumina Grand launched at record high EC prices. Until at the time of recording, also almost nothing much left already. It just makes it very confusing as to Singaporeans still have money to buy properties. And one of the main culprits of a slower market today is without doubt the current interest rate. And during the start of the year, the Feds actually signaled a pivot in terms of the interest rates. And recently they came out and say that the interest rate they will put on hold. That means they will not be reducing the interest rates very soon. And brings us to the question over here. Today, if you are a property buyer, would you prefer to buy a property when the interest rates are high or when the interest rates are low? Because I've known a lot of people who have bought properties during high interest rates and they make money. And I've also known people that bought properties during low interest rates and also made money as well. So let me know inside the comments, what are your views? Have you purchased a property during high interest rates environment? And what was your experience? Did you make money or not? Because in this community that we are forming, it's quite hard for me to have all scenarios covered, and your scenario, your experience could be very useful information to help everyone within this community become wiser in their property decisions. So coming to interest rates, right, how it affects the property market, I would say that generally people would prefer to buy properties when the interest rates are lower. Why? For the sheer fact that your cost of owning the property is lower. There's always this saying that when interest rates are higher, more people will tend to want to sell. Because when you look back at the past, when the interest rates were low, right, actually price went up pretty fast. And when the interest rates were higher, the price actually stagnate or maybe slightly correct, but usually it's not in a very drastic manner. So what we're trying to say over here is that if you're hoping that property prices will tank due to higher interest rates, I would think you have to think otherwise, because history has proven otherwise. All it does is it just stagnate the property market for a bit, and when the interest rates are lower, the price will go up. And if you're asking me why, right, perhaps you can ask yourself this question: what is the result of rising interest rates? Is it because the economy is growing too fast and government is worried that there will be overinflation or bubble forming? They have to come in with high interest rates to actually slow down the growth itself, which brings me to my point. When the interest rates are rising, does it mean that the economy is actually growing? All in all, my take on interest rate is when the interest rates are high, it will be stagnant, drop maybe just a little bit, not really that much. However, when the interest rates goes down, right, you will see a spike in terms of pricing. Now, coming to the next point, should you buy an EC, resale, new launch, landed or what? Let's go into the numbers over here. So today, if you look back, right, I always tell people, after TDSR was being introduced back in 2012, 2013, that period of time, the speculative era of real estate is over. If some of you who are watching or you have heard your parents buying properties back then, you always hear them flipping their properties after 1 year and whatnot. And in 2012, right, it was a hard stop when the government came in with the TDSR and the ABSD. Why? Because today these people will be out due to the fact they cannot even qualify for a loan, and there's SSD as well. And that will be the new trend moving forward. So for the HDB resale market, right, from 2014 onwards until before COVID, the price growth was negative 1.4%. You always hear people saying HDB is a liability and whatnot. If you look back at the past, right, it's the truth. But after COVID, the prices actually went up very substantially, a total of 8.9%, which is 30% over that period of time. If you look over here at the resale executive condo behave pretty much like a HDB as well because it's from the government. However, it comes with condo facilities. Post TDSR period, it went down by 0.2% per annum from 2014 onwards until before COVID. And post COVID, it went up by 12.41% per annum. Means it went up by 50% during this period of time. Looking at the resale condo market, post TDSR was actually 1.7%, which is quite in line with Singapore inflation of about 2%. And post COVID, that means from 2020 onwards, right, it went up by 8.73% per annum. Total increase was 41% over like an 11-year cycle. Next, we want to look at the new launch condo. Post TDSR prices was going at 4.6%, which is quite in line with our strategy where we are asking people to buy new launch, which is wait 4 years to sell, you make about 20%. 4.61 times 4 years, right, is close to about 20%. So it's pretty fair. And post-COVID, new launch prices went up by 9.37% per annum. Last but not least, we want to see the landed properties. A lot of people want to buy landed properties, right? Post TDSR, it was at 2% per annum. Still in line with Singapore inflation also. And pre-COVID, 2% per annum. Post-COVID, it went up by 11% per annum. So which brings me down to my point over here. Which one is the safest? Today, we're not talking about which one can make most profit. Let's talk about the safest. Which one do you think is the safest? The one that performed as per the norm, or the one that performed very aggressively only during COVID period of time? What's your take? Because today, a lot of my clients are asking me, should I buy a resale? Maybe I buy a resale because resale over COVID also make money, right? Contrary to the popular belief that resale cannot make money. Make money already. So your question here, you want to ask yourself, if before COVID don't make money, then during COVID it makes so much. Do you think there's a risk that comes together with this purchase of an entry quantum? Because we always fall into this thing called a price trap. That means you look at lower price. Lower price means better. However, lowest price doesn't mean you also put yourself into a certain level of risk. To me, first thing is always to manage the risk. Looking at this chart, this is Queen's Condo. There's a gradual decline during resale ever since 2012 after the speculative era. During COVID, it went surged by 40% for a 20-year-old property. And if you look at the blue line, right, blue line is actually the Commonwealth Towers. Commonwealth Towers prices was growing gradually until it met its TOP in the year 2018. We call it the TOP surge. You can look at Queen's Peak condominium. The prices also gradually grow during the new launch period, the green color line, until the TOP in 2020, just before COVID period. The price hit its peak during the TOP. And if you look at Sterling Residences, this is the luckiest one because the price actually grew together during COVID. And you see over here, it actually defies the usual performance between resale and new launches. So do you see a risk here? First thing, just ask yourself this question. Today, if let's say you are buying the Queen's Condo at about $1,800 to $1,900 per square foot, how much do you intend to sell next time? $2,400 per square foot? Is it fair? Plus 20% or maybe $2,200 per square foot just on a 20% upside. The question here is you ask yourself, are you able to sell? Because the people that bought just 3 years before you actually purchased it at $1,200 per square foot. Can they sell at $1,600? Can they sell at $1,700 per square foot and still make a decent profit today? And you entering at $1,800, right? Is there a risk over here? Because the first owner only purchased it at about $700 per square foot. Ask yourself this question, are you able to achieve $2,200 per square foot? If you think so, you'll be good buy. And next question is there a very strong big risk over here that your neighbors can actually sell a lot lower than yours? If you think that is the kind of risk that you don't wish to go into, right, then you have to reconsider buying a resale property as an investment vehicle. Next will be my decent strategy, how to select the right investment today if let's say you have sold your place or you're looking to buy your first investment and you have something like $2 million. Firstly is looking at this news. In January 2025, Straits Times actually had this news saying that suburban homes post biggest resale gains in Q4. And it just tells you what you should be doing. But let me break down into the details. Looking at the OCR area back then, why did OCR perform better? Very simple. If you use 3 different kind of unit types, right? 1-bedder, 2-bedder, 3-bedder, let's say for riverfront residences, on the right hand side, as what I circled, right, you can see the annualized profit. You will see that riverfront residences, the annualized profits were averaging around 4 to 5%. Looking at the 2-bedroom, right, it's also about 4 to 5%. But once you look at the 3-bedders, we are talking about 6 to 7% annualized profit, which means more profit for every dollar you spend. Let's take a look at Park Esta as well. The 1-bedrooms, we are talking about annualized profit 4 to 5%. And if you look at the 2-bedrooms, you're talking about slightly better, 6-7%, quite decent. That means if you are buying a 2-bedroom, right, 5 to 7% is what you can look forward to. Buying a 1-bedroom, 4 to 6% is what you're looking at. A 3-bedder, right, people are talking about 7 to 8%. And it just tells me a very simple thing. People will generally want to buy a bigger unit for a very simple reason over here. If you look at the 2-bedroom and the 1-bedroom and the 2+ study, right, total in Park Esta, there were so many units, like 800 over units. But if you're looking at the 3-bedroom units, there are only about 300 over units. So in the resale market that time, right, it's just very clear there will be less 3-bedrooms for sale. Looking at unit mix in riverfront residences, 281 units of 1-bedroom, 1+ study 200 units. The 2-bedroom, there are 430 units. So I do a quick math, right? We are talking about 900 units in the entire riverfront residences, but just the 3-bedroom alone, there are only 400 units. So ask yourself this question. Would there be more competition selling a 2-bedroom and a 1-bedroom, resulting to less bargaining power, or a 3-bedroom has a more bargaining power as the seller? Because today when you're buying a property, you always have to think of an exit plan. How will be your negotiation process when, let's say, there are 200 units of 2-bedrooms selling in the market as a resale? Will you be competing for buyers? Or if you're buying a 3-bedroom, will it give you more bargaining power? Bringing to the next point, how about a 4-bedroom? The 4-bedroom in the entire Park Esta, right, is only less than 10% of the supply. For riverfront residences, there were only 85 units out of 1,400 units. So we are talking about around 5% of the total units in the entire development. Will you have more bargaining power as a seller? So from a demand and supply perspective, right, buying the bigger units will actually give you less competition. Now I'm looking at Property Guru for riverfront residences, especially for the 4-bedrooms, there are only 17 units for sale, as opposed to the 2-bedroom units, there are close to 50 units for sale. So which one do you think is a better position as a seller? Now, my recommendation as for what you can do right now, I've did this chart for you already. Some of you may be telling me, I want to wait for the next launch closer to town, closer to the MRT and whatnot. I would think that every decision comes with an opportunity cost, and time is a very, very important factor when you're talking about buying properties, because your SSD is something you need to consider. Your TDSR also reduces over time, and also the next new launch may not be the pricing that you are thinking that you will launch. It could be higher. So looking at the market today is very important, and using this chart, it just tells you which market you should look at. Let's say you have $2 million, or even if it's $2.5 million, it will be the same equation. For core central region, we are talking about $3,500 per square foot. What you can get for $2 million will be 571 square feet, 1-bedroom. Rest of central region, for $2 million budget, you are able to buy a 2-bedroom over here as well. And for the mass market condo at $2,100 per square foot, you are able to acquire a 3-bedroom. Executive condo at $1,500 per square foot on average, you are able to acquire a 4-bedroom. Which one do you think is better? Example, today as a buyer, right, are you sensitive to PSF? That means before you buy a property, do you go and check how much the owner bought it for and how much profit you are giving? I'm very sure if you are someone that's watching this video and you have watched so many of my videos, right, you surely will be doing it. And will you be happy as a buyer to give people $700 per square foot profit or $300 per square foot profit? If your answer is $300 per square foot, which one do you think is more achievable? For a mass market condo to make $300 per square foot at a 952 square feet unit, right, we are talking about $380,000 gain. And for the rest of central region at $2,600 per square foot, 769 square feet, 2-bedroom unit at $400 per square foot, the 2-bedroom in the RCR will actually give you a profit margin of $300,000. Which one would you prefer? To give yourself a $380,000 profit or the $300,000 profit, buying in the same quantum at the same time? So all in all, in my summary of my game plan is today, if let's say you can afford a quantum between $2 to $3 million, I would think look for a 3-bedroom premium or a 4-bedroom unit. And of course, that being said, there are certain things you need to observe because buying the wrong one can also lead to financial losses. So you need to make sure you actually done your risk assessment. Example, these two developments, they are within the same district. Yes, one is closer to the MRT station, one is not. So looking at these two developments, the one that is not as near MRT stations, you are able to buy it at the same quantum for a 4-bedroom at the price of the 3-bedroom within the similar market. And that is one example of mitigating your risk when you're looking to buy a 3 or 4-bedder. Look around the similar district, the similar unit types. Is it the PSF that is lower or the condo is lower? That will actually form a safety cushion for you in case in adversity, right, prices will not be likely to drop. And during the resale market, right, you have slightly higher bargaining power because you have the most affordable unit for the same unit type. And because the video is getting too long, for my recommendations, this is my number, I'm just a phone call away. Happy to give you my recommendations on what you can buy because everybody's scenario is different. I hope you learned something today. As usual, like, comment, subscribe, turn on notification bell, or even share this video with your friends because it may just help somebody out there. And with that, wish you all the best for your investments, and I'll see you at the next one. Bye.